Hello friends, this is Raman Gill with your weekly Forex analysis for the week of March the 6th. Just a quick disclaimer, this is for educational purposes only. Trading in Forex is high risk. If you have any questions about your individual investment needs, I recommend you talk to your investment advisor. To start things off, we will take a look at our calendar for the week, our fundamental news coming out this week, and then we will get into the COT data to understand how the bigger players are positioned, and then finally we'll get into the technical analysis. So let's take a look here. For this week, we don't have a ton of news coming out that's critical. However, there is some important news coming out that would have a big impact on the market. So starting things off, we have Bank of Japan, Governor Kuroda speaking. On Monday, all the news that we have here, or most of the news that we have here, is orange news, so not the red news that we need to pay a lot of attention to. So we have MPC members speaking, German factory orders, and then FOMC members speaking as well. And then for Australian dollar, we have RBA Deputy Governor Lau speaking. However, in terms of the critical news, we only have Chinese data here, trade balance, which is important. And then on Tuesday, again, a lot of yellow type of data. However, for British pound here, we have Bank of England Governor Carney speaking, and most of the time when he speaks, there are impacts on the market, so we'll watch out for that. And then going into Wednesday, this is when the news really picks up. We have manufacturing production numbers for the British pound, and then Bank of Canada rate statement coming out, and then overnight rate for Canadian dollar. And this, of course, will have an impact on the market. If it's supposed to be held at this place at 0.5%. However, if there is a change in the rate, if they do cut the rate, this would have a negative impact on the Canadian dollar, and the dollar CAD would go up in this case. We have crude oil inventories at 10:30 a.m. Eastern on Wednesday. And then going into the afternoon, we have New Zealand dollar official cash rate, and then RBNZ rate statement coming out as well. So again, they are, last month they were talking or making comments about potentially down the road they may be cutting interest rate, or they were positioning themselves for a potential rate cut down the road. It is not expected to happen this week, so we may see the number remain the same. However, what they say in their statement, if the statement is more dovish than expected, we could see the New Zealand dollar go down. However, what we have been seeing from Australia is that the statements that are coming out have been quite bullish, or at least they're considered hawkish. And there's been no rate cuts in sight, at least at this point, for the Australian dollar, which has been pushing Australian dollar higher. So if we hear something similar for the New Zealand dollar, we'll see a similar response for New Zealand dollar as well. So we will pay attention to what happens with this rate statement here. And then we have, of course, the press conference and Governor Wheeler speaking. Again, this will have impact on New Zealand dollar. And then we also have the inflation number out of China, which will be important, of course. And then going into Thursday, this will be a big thing here. We have euro for euro, we have minimum bid rate. So ECB is not, at this point, they have been talking about actually cutting their overnight rate by 10 basis points. This is what they had talked about, and let's see what they actually do about it. If they don't cut the rate, or if they cut the rate by less than 10 basis point or by 10 basis point, that would meet market expectations, and it may actually be, if the rate cut is lower, it may be more bullish for the euro. However, if the rate cut is bigger, let's say 15 basis point, or if the commentary that comes out in the press conference here is actually more dovish, that would have negative impact on the euro. And also, if they increase their quantitative easing program, that could also have a negative impact on euro. So if you're trading the euro, be mindful of these developments on Thursday here. And then going into Friday, we have Canadian dollar employment change and unemployment rate. For Canadian dollar, again, not a lot of news for the US dollar this week. And then we have Chinese news here for industrial production. So that's all the news. Now let's go into the commitment of traders data. Starting off with Euro US dollar here, we have seen the positions actually have changed slightly. Here we see the leveraged money positions, the green line, the shorts have increased. The shorts had actually been decreasing previously. However, now they have actually taken a turn to the downside. So if you take a look at this green line here, they are pointing to the downside and the dealer longs have increased. So this would actually suggest short for the euro. For the pound, we see an increase in short positions here as well. So again, I'm looking at the green line here, the leverage money, which is the positions have increased from negative 58 to they have gone up to negative 66. So this, from the COT perspective, this would suggest actually, and if we look at the dealer positions, the dealer long positions have increased, and this would suggest a drop in pounds. So this would point to a short pound. Okay, so here we see an increase in, so for the leverage money here, we see the positions have gone from negative 43 to negative 36. So there's a decrease in the Canadian short, so which would point to Canadian dollar going up, which would be a short dollar CAD. For Australian dollar here, we saw over the previous weeks, we have seen the asset manager positions, the red line actually has crossed the zero line. So the longs have gone up for the asset managers. And the positions for, if you take a look at the leverage money positions, have actually, the short positions have reduced. So we had negative 7,000 and now we are at negative 3,000. And if you take a look at the dealer positions, which are again the blue line here, the dealer positions have actually, longs have dropped to 15.9 from 25.6. So this would suggest a long in the Australian dollar. And here for the New Zealand dollar, the green line, again, the leverage money has, the long positions have increased. The green has actually crossed over the zero line. So they've gone from short positions to long positions. And looking at the dealer positions, the blue line, they have actually reduced their long positions from 12.9. They've gone to 10,780. So this would suggest overall, this would suggest a long New Zealand dollar. All right, so now let's move on to the technical analysis. We'll start off with Euro US dollar weekly chart. Here, looking at the weekly chart, we saw Euro come down to right into this support and resistance area at the bottom. Went and tested this this candle here, this previous candle where the trade had taken off, or the euro had taken off to the upside, and now we saw a test of this and then a bullish close on the weekly candle. So the bullish close would suggest that we may see a pullback and then a further move to the upside. So if that is the case, we may see a pullback come to 109 potentially, this support and resistance area, and we may see a move up to 1100, and if that level gets broken, potentially even higher. So the weekly candle shows bullishness. Going into the daily candle here, it was a bullish candle. However, we do see wick up top here as well. So the price, the 1050 price, we didn't quite get to 1050, but over 10, the price got rejected, and then we've seen a market open to the downside here. So now taking a look at it, we have come into resistance here. This 1050 is quite a strong resistance level. If you take a look here as well, we have seen price react to this 1050 level before. So now the question is, where do we go from here? There is the ECB rate decision coming out, which will put pressure on the euro. And so that would actually throw a bit of a curveball here. So if the price were to actually move to the upside, we would look at this 1050 level, test it again, and then potentially going into this 1100 level. If, however, the market starts pricing in a rate cut or a bigger rate cut for the euro, we may see the price move to the downside. So the daily close was bullish, but we did see a rejection up top, a nice wick up top. So now the question is, which direction will this go to? We could see it go and test this 1050 and potentially 1100 again, which is nice support and resistance. However, it could come down based on the rate decision as well. So we'll be open to trading this pair. We'll look for longs if it presents us opportunities to go long. However, we'll be open to trading this to both sides. Pound here, we saw a big U-turn in the British pound. It was a big week. Everything was to the upside here. We saw on the daily chart, we saw price push down lower and then it quickly pulled back in, and from there everything was very, very bullish. So we haven't quite seen it, it hasn't quite engulfed the previous candle, but it's fairly close. So here what we could expect is a pullback and potentially into this 4100 level, and if it stays above this, we may see a more bullishness in here and potentially into this 4350 level. And if that level is held, if the price stays above this level, we may even see price go higher. However, if the price comes back for a pullback towards 4100 and is not able to hold that, we may actually see the price dropping as well. So let's take a look at the daily candle. Again, from the daily perspective, very, very bullish. Weekly perspective, very bullish as well. So now here we are coming into, again, we have come into an important support and resistance area. So now we need to see if the price is able to hold above this 4250 level. If it does, then the next level we're targeting is 4350. And if that actually, the price goes through that, we would be looking back into this 4400 level, potentially back where the price moved started. So based on the weekly and daily candle, this is showing bullishness, and it is coming into resistance. If it's able to hold above this 4250 level, we are looking into a further move to the upside. Let's move on to the Australian dollar. Australian dollar has been very, very bullish. We saw one day of selling and then we saw a big push up again into this Australian dollar. Across the board, I think Australian dollar and pound were two of the biggest gainers in the majors here. And looking at this weekly candle, it looks very, very bullish. In terms of a pullback, we could be looking for a pullback into 7250 level here for a move, another move to the upside. So again, this is Australian dollar has also come into resistance here. So it closed right into that level 7240 area, which was our previous weekly resistance here. And further, so if the price breaks through this 7440 level, we're looking at 7494 or 7500 level, and beyond that we would be looking, so once price starts holding those levels, we may be looking at 7600 potentially based on the weekly chart. So let's go on to the daily. Again, daily was very, very bullish close. We saw the entire week was a lot of bullishness here. So one concern though, again, as you can take a look here, we are into this daily and weekly levels, and beyond that we are looking into, this is a nice support and resistance area, which is 7494 or 7500 here, and then after that we could be looking at these levels 7550 potentially, and then making our way to the upside 7580 and all the way to 7620 area. So these are some of the levels to watch if the price does break above this level. Again, a strong level. If it manages to break up here, we are looking for a further upside in Australian dollar. However, sometimes what we also tend to see is when there is a big sharp move up like this, there is some closing up of positions. So we may see a pullback. So if you are looking for entering positions, this 7250 level may be a good level. This is a nice support and resistance here. So this could be a level to potentially buy from. If it does come down here and it shows signs of rejection here, this could be a potential buy, or even potentially into 73.50. I do prefer the 72.50 over the 73.50. It is a sharp move to the upside, so a pullback could be expected, and this could be a nice level for the pullback. And if it does come all the way, then 71.60. However, based on COT and just the commentary around Australian dollar, the commodities have gone up quite a bit, and the central bank is in no hurry to cut rates. Iron ore, copper, and gold, all of these commodities have gone up, which has really created a favorable environment for Australian dollar strength. So we'll watch that. Moving on to the New Zealand dollar here, again, we saw a very, very sharp move up. We were looking for a move to the downside. It could not break below this 65.50 support and resistance area here. It ran into very, very strong support, and now we have seen a big bullish candle. Again, it's coming up into these resistance areas, and so the next level would be looking for New Zealand dollar would be 68.80 level, which will be this weekly high here. So if it is able to go above this previous high, which was 68.30 area, or 68.20, so if it's able to hold above this, we're looking at 68.30 and then potentially higher. So on the weekly chart here, the move in the New Zealand dollar wasn't quite as sharp as Australian dollar. However, it did gain with, we saw positive dairy prices, and then, of course, the rise in commodities helped this as well. So based on the daily candle here, it was very, very bullish, and now would be looking for a hold above 68.20 level. If the price holds above 68.20, again, we are looking at 68.80 potentially. And then on the upside here, we are looking at into 69.40 level, or potentially into 69.20 or 30 level right here. So that would be the next target, 69.25. So again, it needs to hold above 6800. So the next target after that would be 68.80. If it crosses that, we're looking at 69.25 and then potentially even higher into these levels. 0.70. So those are some of the support and resistance lines we'll be watching. In terms of the pullback, let's see where we could expect a pullback. This is a good level. 67.50 is a good level for pullback, and then 67.28 area would be a good place for a pullback. And then we are back into the 66.80 level, which would be a good level for a pullback, and then a move to the upside. Again, we have a rate statement for New Zealand dollar, which could have an impact on a New Zealand dollar. So if you're trading it, be mindful of that. So that's all for this week. I will see you all next week. So have a great trading week.